Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Wednesday. These are the stories that set your agenda. The MSCI Asian benchmark falls for the first time in 3 days following a retreat on Wall Street. But China tech stocks gain as Alibaba pledges to ramp up AI spending. Fed Chair Jerome Powell reiterates there is no risk-free path for the Fed.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path.
President Trump says NATO countries should shoot down Russian jets if they violate their airspace. And in a change of tone, the US president says Ukraine can win back all territory occupied by Russia. Plus, hunkering down Super Typhoon Ragasa makes landfall in Hong Kong after causing flooding in Taiwan that's killed 14 people. So the US session then buffeted by the comments from Jay Powell, at least no commitment from the Fed chair that October is in play for a next cut. And we've seen some repricing in terms of expectations as to where the Fed goes, but really focused on the dual challenges now for the Federal Reserve when it comes to the labour market, but also the risks of higher inflation. And so as you saw, particularly tech stocks falling pretty hard yesterday, taking a bit of a step back, again, in the context of this rally that we've seen since April. European futures then a little softer in the session today, pointing lower, at least by 0.4% after some modest gains yesterday. FTSE 100 futures here in the UK looking to drop 24 points. S&P E-minis after that softness of yesterday looking to add 0.1%. Nasdaq 100 futures again after the drop that we saw by the end of the close looking to add 25 points. Let's flip the board and have a look cross asset then. Of course, the focus on the yield curve. The last time I checked, there wasn't much movement across treasuries. Right now, 410 on the benchmark, relatively stable on the back of the comments from Fed Chair Jay Powell. Mixed messages that overall from Fed officials right now, with some emphasising inflation risks and others emphasising the risks around the labour market. Euro dollar at 118, a little softer on the single currency by 0.1%, $67 a barrel, closing in on 68 currently, pricing up on oil by 0.1%. The focus very much on the pressure coming down on Russia from President Trump. The question is whether he in fact acts or European allies take further measures to constrict and restrict Russian oil supplies. Gold at 3,769, so still near those record highs for the yellow metal, up again in the session today by 0.1%. Let's cross over right now, bring in Winnie Su from the Asian markets check, of course. And Winnie, it's been a bit of a mixed picture across the Asian story, but a focus once again on commitments around AI.
Yeah, exactly. We see that the Asian market is actually quite fluctuating today. Like you mentioned, Tom, it was down earlier today because of that weakness translating through from Wall Street overnight. But with that China tech optimism, actually, we're seeing the overall index pairing some losses. As of now, we saw that actually in Hong Kong, things are looking quite positive as well. In the greens market, still open, although trading volume down about 20% compared to the 3-month average. And that's because of that big super typhoon that we're seeing in the region. Yes, we are hearing right now that the peak is over and that the typhoon is moving away. So most likely we're going to see a de-escalation in terms of the level in the next hour or so. So overall, we see that the HKEX is actually handling the markets pretty well. But like you mentioned, one big stock that we're going to highlight again here in Asia is Alibaba. And we are hearing again from the CEO about their investment in AI. So it's signaling that there is going to be still very strong demand from the customers around the AI front. And also Cathy Wood saying that they are increasing, they are adding their position in Alibaba. That's the first time in 4 years. So foreign investors also embracing that stock right now that's really hot on the AI theme. And that's supporting the overall China chip stocks today. today, which is also rising after Huawei said that they have this AI plan to overtake NVIDIA. Now, one other sector that we're watching today in Asia is the defense sector. We're seeing that the Korean and Japanese defense stocks rising after Trump said that the NATO nations should shoot down the Russian aircrafts if they violate the airspace. So we have already seen that big rally in defense sectors across the globe because of that increased military spending. So most likely that's also going to provide an additional boost. So we're going to see how that translates into the trading session for European defense stocks today.
Yeah, absolutely. A really important point to flag in terms of what we could see in European defence stocks, given the moves we've seen in their Asian counterparts. Bloomberg Asia equities reporter Winnie Su with that update. Winnie, thank you. To the macro right now, Federal Reserve policymakers then giving mixed signals on the path ahead, clouding the outlook for interest rates. That was underlined by Chair Jerome Powell, who warned that risks remain for both the labour market and inflation.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path. If we ease too aggressively, we could leave the inflation job unfinished and need to reverse course later to fully restore 2% inflation. If we maintain restrictive policy too long, the labor market could soften unnecessarily. When our goals are in tension like this, our framework has long called for us to balance both sides of our dual mandate.
Right, let's bring in Bloomberg's Valerie Tytel. Valerie, it seems that the Fed Chair Jay Powell is signaling there is not necessarily a glide path lower for interest rates at this stage. What was the market reaction to what we heard from Jay Powell? Did they interpret a slightly more hawkish Fed chair?
Well, look, the equity market was soft after he spoke, but really unclear whether Powell was the catalyst for that, because essentially he really gave us nothing new yesterday, really towed the line to the same tone he had in last week's press conference, even using some of the same language. But it really cements Powell as really in the middle between the hawks and the doves at the FOMC. We've had a lot of two-way language this week. We had on the more hawkish side Beth Hammack saying that if we cut too quickly, we risk the economy overheating, and she's laser focused on inflation. On the more dovish side from Michal Bowman, she said the Fed is at a serious risk of being behind the curve, and if the labor market continues to deteriorate, she wants a faster pace of cuts. She's saying that with already her dot implying 2 more cuts for the remainder of the year. And then Jerome Powell right in the middle, as you heard there, warning the risks to both sides of the mandate. He again gave no clear indication that an October cut is a done deal. Maybe not a surprise, Tom. He spoke just a week ago, and there has not been a lot of new data since then. That's something he failed to really give the market signal at in last week's press conference, and didn't do so again today on the guide for October. Maybe that's what the market was wanting. We did see the equity market trade soft after the end of his press conference. Towards the end, he did mention that equity markets look highly valued. Maybe that was the reason for the equity market to slide, but only 0.5%, and really just undoing the boost to equities from Monday's trade that was more focused on NVIDIA and OpenAI. But really, regardless of what the equity market does, Tom, gold continues to make record highs, has clinched a record now for 3 straight sessions. In the month alone, has rallied 10%, and just in the last week to date, up nearly 2.5%. So gold seems to be the haven, no matter if the equity market is up too much or down too much.
Yeah, remarkable run-up for yellow metal, and maybe 4,000 in reach at some point this year. Bloomberg's Valerie Tytel, thank you very much indeed. Breaking down, of course, the market reaction as well to what we heard from the Fed Chair Jay Powell speaking yesterday. Meanwhile, US President Donald Trump says NATO should shoot down Russian aircraft violating their airspace. He also struck a more sympathetic tone on Ukraine's chances of winning the war. In a social media post, Trump said he believed that Ukraine was positioned not only to fight back, but to reclaim all the territory taken by Russia. He voiced his support for a Ukrainian fight back when he met President Macron at the United Nations General Assembly.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it, but I feel that way. I really do feel that way. Let them get their land back. Yep. So we'll see how it all works out.
And there is backing for a tougher stance by NATO and the EU. Latvia's president says the West should be ready to respond to Russia with force to prevent future airspace incursions.
President Trump and other leaders who have expressed their views on this issue are right. If Russian aircrafts keep flying, keep violating our airspace, NATO's airspace, then the only way how to stop them is to show force.
Well, let's bring in our Europe correspondent, Oliver Crook. So, Ollie, on this change of tone from President Trump when it comes to Ukraine, suggesting that Ukraine is in a position to reclaim not just some territory, but all territory lost to Russia, how significant is this, and will the rhetoric be backed up?
Well, Tom, that's really the big question here. I mean, it's significant in the sense that these are the kinds of pronouncements we've not really ever heard from Donald Trump since he took office at the beginning of this year. He's had a much more hawkish, a negative stance on Ukraine, on Zelensky at some point, calling him a dictator. These were, were very sort of low points in that relationship. And it's interesting, Tom, I mean, we're almost 7 months to the day away from that Oval Office meeting where the two presidents were sitting in exactly that same configuration in a different room, and now a very different kind of conversation. You've got it there on your screen. Donald Trump there on Truth Social saying that after getting to know and fully understand the Ukraine-Russia military and economic situation, after seeing the economic trouble that it is causing Russia, I think Ukraine, with the support of the European Union, that's key because he doesn't want to pay for any of it, the EU needs to back it, is in a position to fight and win all of its territory back. That's very much an option. He said later in that Truth post, he said, why not? He referred to Russia as a paper tiger. He even said that Ukraine could take back its original form, and who knows, maybe even go further than that. So when you get claims like that as part of that initial post, that potentially puts some doubt into sort of how realistic he thinks that may be. But he's getting, Zelensky's getting the backing of President Trump, which is something he has fought very, very hard for over the last few months. The question is this part of the sort of Trump art of the deal to show a sort of harder face towards Putin to try to get him to the negotiating table? I mean, regardless, as far as the Europeans are concerned, they're going to want to take advantage of some of this momentum while it is going in their favor from the President of the United States. Remember, it was President Trump's demand that really got the EU Commission to move ahead with the banning of the LNG imports into the European Union before the end of next year. We should say that in that press conference between Zelensky and Trump, there was also this issue of the pipeline gas and oil that is still coming into the EU. Remember, there are carve-outs for both Slovakia and Hungary, and basically in that conversation, Trump said that he may very well talk to Viktor Orban about basically stopping to get buying that Russian fossil fuel, which is something that the EU has failed to convince Orban to do to this point. So really, if you're looking at it from Zelensky's perspective, he's really on a very hot streak over the last couple of weeks, first getting the EU to ban that LNG, and now really having Trump on his side for the time being.
Yeah, and as you suggest, the energy piece remains crucial, doesn't it? At least from President Trump's perspective. So we'll see if there's further moves on that and if the Europeans can accelerate the timetable around unwinding from some of that Russian energy. We've also been hearing, of course, NATO members and countries that have seen their airspace violated by Russian jets and drones taking a much tougher line. Have they coalesced around a potential response?
So they've coalesced around the idea that the response will be robust. What robust exactly means is not entirely clear, right? There are sort of divided opinions within Europe about what the correct course of action is. Again, this is something that the President of the United States weighed in on yesterday, saying that basically when he was asked by a reporter whether or not he thinks that the European nations whose airspace are being violated should shoot down these planes, he said, yes, I think that they should. Whether or not the United States then would back them is sort of another question. He was pushed on that. He says it kind of depends on the context, but he's in a mood right now where he really is very sort of happy with NATO. He's happy with that 5% target. Yesterday, though, I caught up with the Prime Minister of Estonia, who's obviously in the sort of crosshairs here, literally and sort of figuratively, with that flyby over his airspace just a couple of days ago. Have a listen to what he said after those consultations with the NATO nations and what their reaction should be.
The main message is that allies, which is very important to everybody, stand firmly behind Estonia. Both North Atlantic Council and also in the UN Security Council, our allies showed full solidarity and unity. And the message is that responsibility with this kind of escalations or incidents lies only on Russia. These kind of violations are very dangerous and must stop. So this has been the main message from our allies.
And in your government's conversations with the White House and the Trump administration, has that been the same message, or you received the same kind of backing from the United States, whose position in NATO there had been some debate about a few months ago, a little bit less debate about now? What have those conversations been like?
We have been on the governmental and from the state side in contact with the states, and the messages have been the same. And as President Trump has publicly said that he expects United States and NATO to protect Baltics and Poland, and that was a very strong message. And also it was a very strong message from the United States in the UN Security Council. So the message from the States has been very strong and very straightforward.
So, Tom, despite sort of more hawkish talk from Trump and from the polls, we also heard from the German defense minister, who took a slightly different approach, saying that basically slapdash demands to shoot something out of the sky or do some great show of strength help less than anything else right now, that this is part of Putin's calculation to escalate things and then basically act aggrieved. So some divided opinions there within Europe.
OK, Bloomberg's Oliver Crook, great reporting and an excellent interview, of course, with the Prime Minister of Estonia. Ollie, thank you. Coming up, Hong Kong hunkers down as Super Typhoon Ragasa makes a landfall. We are live in the city next. Plus, later in the programme, we'll discuss the state of tech in Europe. We're going to speak to a VC and a partner, Laura McGinnis from Balderton. That is a VC firm that has backed the likes of Revolut, Zopa and Wave on why the European ecosystem is the one to back right now. Stay tuned for that conversation, 6:40 a.m. UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Super Typhoon Ragasa has battered Hong Kong with torrential rain and 195 km/h winds. It would be the city's most powerful storm in 7 years and has already left a trail of destruction. At least 14 people have died in Taiwan and more than 100 people are missing, and at least 6 people have died in the Philippines. Let's bring in our Asia transport reporter and correspondent Danny Lee, who is in Hong Kong. Danny, what is the latest on the ground then?
Oh, Tom, the worst of Super Typhoon Ragasa has now left Hong Kong and is working its way southwest to make landfall in the western part of Guangdong province. Now, we have had an update from the local weather authority, which is saying that there will be a downgrade in the storm signal to a level 3 of the worst, a T8 signal from 120, which is about an hour or so from now. So we are going to see things slowly get back to normal later on in the day. But for now, it is still dangerous, as there are still very strong and gusty winds. It was a very difficult night as the storm rolled in. Buildings were swaying, lots of high winds shrieking, keeping a lot of people like myself up at night. So not easy as the evening wore on. But for now, we've not seen too many reports of damage. There is some concern around some storm surges that have damaged buildings and still some localized flooding to come. And clearly in southern China across the board, a big manufacturing hub of China that is now under threat.
And in Hong Kong, Danny, there has, of course, been trading still on the exchange, and this is new. This is a change from the Hong Kong authorities. They have kept the exchange of the bourses open. What has been done to keep that trading activity in place? What has it meant for bankers and traders in Hong Kong?
Yeah, this has been one of the unique features, one of the biggest tests, in fact, for the Hong Kong bourse. It's been such a lively activity of fundraising this year, lots of IPOs going. And really the fact that by changing their systems to ensure that trading could continue in the worst storms, it meant most bankers, lots of bankers were working from home. There's still a number which have been asked to come to the office, even in the worst storm signal. And so lots of bankers were staying in luxury hotels overnight. So whether it's a good thing for them or, one of the challenges and unique features of this change in policy, trading has still kept the markets flowing, and it's still relatively light volume in Hong Kong. But it's very much Hong Kong sitting. It can still be business as usual, whether it be storms or anything else.
OK, there is that resilience, isn't there? Bloomberg's Danny Lee in Hong Kong. Thank you for that update. Coming up, a rosy outlook from Micron, adding to the AI optimism. Details on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Micron, the largest US maker of memory chips, has given an upbeat forecast saying AI has boosted demand. But the company warns that spending will go up as it tries to keep up with demand. Let's get more from our Asia tech reporter, Annabelle Drulers. Annabelle, what else did Micron have to say in this earnings report in terms of the outlook in particular?
Yeah, lots of focus on that outlook, as you said. So the big number really was the revenue guidance, and it came in at $12.5 billion. That's what's expected for the fiscal first quarter. So well above what Wall Street was expecting of $11.9 billion. Profit per share is also expected to come in better again than what had been predicted. So it does seem like that idea is continuing to build, that Micron is one of the big beneficiaries in all of the AI spending we've seen to date. Of course, it's a big supply to NVIDIA for HBM, high bandwidth memory, that's key for AI chips as well, alongside Samsung, SK Hynix. But we didn't really see too much action in late trading. We saw it at one point up 2.7%, but most of the session in late trade, it was very, very muted moves, really. But that does also underscore just the strength of the stock rally that we've seen so far this year, because it's nearly doubled. And also we had a couple of bullish forecasts ahead of these numbers, including from Citibank, that upgraded their profit target or price target to $175 a stock from $150. It just seems like a lot of the good news was already baked in.
OK, so that explains some of the price action, or the fact that it was relatively muted. Annabelle, when you take all this into account, then it does seem, doesn't it, that high bandwidth memory, at least Micron is positioning itself on that front. We still watch to see whether Samsung can catch up with the likes of SK Hynix. Annabelle, thank you very much indeed with the update from Micron, of course, our Asia tech reporter, Annabelle Drulers. Now, some of the stories making the news this Wednesday. New Zealand has named Anna Breman as the new Reserve Bank governor, appointing a woman to the role for the first time. Breman is currently first deputy governor of Sweden's Riksbank and will start a 5-year term on December the 1st. China says it will stop claiming special benefits reserved for developing nations at the World Trade Organization. The decision removes a point of contention with the US, which has been holding up negotiations on reforming the WTO. And the UK Chancellor, Rachel Reeves, says Britain will try to take advantage of the chaos sown by changes to US visa rules by making it easier for highly skilled foreigners to come to work here in the UK. The Trump administration announced a sharp hike in visa fees for skilled workers at the weekend. Reeves said, in contrast, the UK will be expanding visa routes for global talent. And Volvo Cars plans to step up investment at its US factory to mitigate the cost of tariffs. The company will increase production at its plant in South Carolina, adding a new hybrid model tailored for the US market and its best-selling XC60 SUV to the production line. Volvo will also raise prices to offset some costs. Coming up, I'll be joined by Muzinich's Tatjana Greil-Castro for a conversation on the markets, how she's thinking about the Fed, what she interprets from Fed Chair Jay Powell, how to position in credit, and why she thinks there could be more selling at the long end of the US Treasury curves with yields up. Stay with us. This is Bloomberg. Good morning. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The MSCI Asian benchmark actually edges into positive territory, just about. That, of course, on the back of 3 days of gains. It followed a retreat on Wall Street. China tech stocks, though, gaining, as well as Alibaba pledges to ramp up AI spending. Fed Chair Jerome Powell, meanwhile, reiterates there is no risk-free path for the Fed. And President Trump says NATO countries should shoot down Russian jets if they violate their airspace. And in a change of tone, the US president says Ukraine can win back all territory occupied by Russia. Plus, hunkering down, Super Typhoon Ragasa makes landfall in Hong Kong after causing flooding in Taiwan that has killed 14 people. Let's get to the markets then. After a bit of a retreat yesterday on the US benchmarks, but again, in the context of these record highs, today US futures are pointing slightly higher. And as I mentioned, the MSCI Asia Pacific is right now flat, but there have been these gains. Mainland China, Hong Kong as well, is currently up. HS Tech is getting a lift up 1.7%. European futures pointing a little lower by 0.4%, so it could be a bit of a challenge day here in Europe. We watched the defence space, of course, because defence stocks have rallied over in Asia on those comments from President Trump. You saw modest gains of around 0.3 by the close for European equities yesterday. FTSE 100 futures pointing low by 0.2%. S&P E-minis looking to add a tenth after some modest losses yesterday. Nasdaq 100 futures pointing to gains of 23 points. Let's split the board and have a look cross asset then. Treasuries are relatively stable after those comments from Fed Chair Jay Powell pointing to both the risks on labour and inflation. 409 on the benchmark 10-year. Euro dollar close to 118, a little softer by 0.1% on the single currency. Oil prices slightly higher. Traders eyeing potential additional squeezes on a Russian output, up 0.1%, and gold still at those record highs, up 0.2% for the yellow metal. Let's get a broader perspective on these markets and bring in Tatjana Greil-Castro, Public Markets Co-Head at Muzinich. Tatjana, good morning.
Morning.
What do you make? We're getting such a different take on how to think about the Fed's next steps from Fed officials, particularly where the emphasis should be on its dual mandate, the labour market or inflation. It doesn't seem like the FOMC is clear on this. Are you?
So in terms of clarity, I think there has been the shift to unemployment, right? And that very, very nicely kind of opens up Powell and the Fed to actually accommodate what Trump has been saying. So that's a nice narrative to shift tack a little bit. The way, when you look at the employment data, so the employment data, the way we look at it, is mostly driven by a lack of supply. But does that necessarily mean that the unemployment rate is going up? And I think that's really the question. So you can now look at the employment data and say, well, employment is growing less strongly, which clearly it is, and the revisions have been significant. But does that lead to an increase in unemployment? And I think that's really where I think we are looking very closely. If that slowdown in employment growth is leading to unemployment, oftentimes people say in the past that can switch very quickly. I think given the backdrop of the huge investments that are being made, particularly in the US with AI, but also with the reshoring and other things, it's difficult to see that unemployment rate is going up.
Does that mean you fade bets on additional cuts from the Federal Reserve? Because you remain constructive on these markets.
Very constructive on the markets. I mean, lots of rate cuts have been priced in.
Too many?
Perhaps. Having said that, again, you know, with a new chairman and all those things, it could be that it goes below what is considered neutral. What is neutral? We'll probably say it's at the lower end of neutral, what is priced in at the moment. So there may be a little bit of that, but yeah, we can see the landing zone being around 3%. If it was, it could be the lower end of neutral, or maybe even below neutral. That would be very, very supportive for risky assets.
There had been early in the year a lot of hand-wringing about the sell-off in the Treasury market, particularly at the long end. Things have stabilised. Does that continue?
It has stabilized. Not a lot of talk about fiscal expansion, the lack of spending at the moment. That doesn't mean that will continue. So we are still cautious on the longer end. We like the short end because of the expected rate cuts. And that's very supportive of the short end. You can see that
there's
also
still value in the short end.
Over the last, well, I think the value of the short end is not necessarily that there's a continued significant rally. Even so, we have to, always consider there's a backdrop for a downside scenario. And there, clearly nominally, US rates are much higher than European or any other rates, well, other than sterling, which is a different story, the gilts. So as a hedge, it's still there. Yeah. But otherwise, the short end, the steepness of the curve allows you to generate returns above what the yield is suggesting. And the total return boost makes us so confident in continue generating attractive
Where
returns.
are you finding opportunity in the credit markets? What's a screaming buy to you right now? Are there any screaming buys in credit?
So in terms of buys, yeah, I mean, there's still Europe in spread terms is still somewhat better. But then you look very deeply into sectors, for instance, autos, clearly with the headwinds that autos has. But it doesn't mean that they don't have the balance sheet to survive those headwinds. So you still get additional spreads going there. We still like banks, particularly Tier 2. Where, again, you can get extra spreads. If you're constructive on the market, you're just picking up those additional spread returns, by going into sectors like this. We still are constructive on high yield. Fundamentals are fine. Valuations are where they are. But with the curve and the sort of the money market as an alternative, and also with valuations in equities as you're taking profit, you can go into credit where you have less downside risk and you still get paid for it. And technicals are extremely strong.
Tatjana, excellent. Thank you very much indeed. Maybe some opportunities in auto credit if you look, of course, and do your homework. Tatjana Greil-Castro, we remain constructive, decent fundamentals, returns to opportunities, and very strong technicals, of course. Public markets co-head at Muzinich, Tatjana Greil-Castro. Thank you. Now, the European Central Bank board member, Piero Cipollone, says euro area inflation, meanwhile, is on target. Ties into our conversation, of course, more broadly with Tatjana Greil-Castro. And it expects to stay there for the next 2 years. Speaking exclusively to Bloomberg, Cipollone was also optimistic about growth, but said the central bank is ready to act if necessary.
If we look at the activity, we saw that the European economy has been surprisingly resilient despite all the uncertainty and the tension. We are doing pretty well. The ECB just released the latest forecast, and we revised for the first time in a long time the growth forecast for this year. We went from 0.9 to 1.2, so for the first time we revised up. And the latest number we are seeing looks good. I mean, probably the economy is doing well. I mean, we might have a slow, some reduction in growth for the third quarter, but then the pattern will be resumed. And we expect that the growth will be in a good place also in the coming years, because it's predicated on good fundamentals like a resilient labor market, solid financial condition for households and firms. So, looks good.
You're feeling confident for now?
Well, uncertainty is still there.
Well, walk us through those uncertainty. Kind of walk us through the risks and how that ripples out in terms of the economy. Are we talking about upside risks in terms of inflation, or going in the other direction?
Well, we think that the risk on inflation are very balanced. And we are in a good place. I mean, we are right on target. We will be close to target for the next 2 years. Inflation expectations are well anchored, so we are in a good place in terms of inflation. Again, the risks are balanced. Obviously, you could have some major geopolitical event, oil spikes, everything can happen, and this can, lead the inflation both direction. Also, obviously, trade tension can explode again, and this will increase the uncertainty. So, but overall, we think that we are in a position that we can manage the incoming events, and we are ready to react whatever is needed in any direction. Overall, as I said, the balance of risk for the growth seems to be more balanced today than a few months ago.
The ECB's Piero Cipollone speaking exclusively to opening trade anchor Kriti Gupta. Now, Europe's asset managers have long agreed they must consolidate to survive, and a string of high-profile acquisitions suggests they are finally doing something about it. That is the subject of today's Bloomberg Big Take, and our asset management reporter, Leo Kershaper, is here with more. What is the situation, Leo, facing asset managers? What's driving the consolidation? Because, as you say in this piece, well worth a read on Bloomberg.com and, of course, on the terminal, it is starting finally to happen, consolidation amongst asset managers in Europe.
That's true. It's certainly not a new dynamic, but the pressure on these firms is now increasing. You've got, of course, a flight to passive over the past decade, which means for the asset managers lower revenue margins. And at the same time, you've got rising costs. And in Europe in particular, a lot of asset managers are still controlled by banks and insurers. And these, big firms are now asking themselves, these asset management businesses, they only make up a small part of our bottom line. Should we double down or should we exit? So, as you said, European asset managers have long agreed that they need to merge in order to survive. And the new development over the last 12 months or so is that we've now seen some action. We had BNP buying AXA Investment Managers, creating a $1.8 trillion player. Natixis and Generali agreed on a deal that would create Europe's second largest asset manager. And of course, at Bloomberg, we've reported about the talks between Amundi and Allianz Global Investors late last year.
What are the challenges to more deals of that ilk?
So one very general point, not Europe specific. It's always a question about who gets to take control. It's in corporate history, we've had a lot of, infamous co-CEO structures, and that hasn't worked out so well. So that will always be a curveball to, big deals in asset management and beyond. And the second point is pretty Europe specific. National politics get in the way. There's a fair amount of doubt now that, the deal with Generali and Natixis will actually go ahead, because the Italian government is not too fond of decision makers at Generali, which is a big buyer of Italian government bonds, slipping further away from the Italian government's influence. And then I think a third very almost quirky curveball to deals in Europe is the fact that one of the drivers between the deal between BNP and AXA IM, for instance, was an accounting quirk known as the Danish compromise. And that,
I love a quirky curveball. That is a quirky curveball.
That accounting treatment allows asset managers, banks to buy asset managers with a preferential capital treatment. And so that deal happened last year, but the ECB has since turned around and said, well, actually, we don't think it's right that banks get preferential treatment for buying an asset manager. Let's not do that. So that perk is now gone, and it's expected to at least slow down some of the deal making.
OK, fantastic piece of reporting. Domestic politics, potentially a challenge. We've heard that one before in Europe, haven't we? Leonard Kershaper, thank you very much indeed, with the Bloomberg Big Take, which you can find, of course, on Bloomberg.com and on the terminal. Coming up, why the VC firm backing Revolut thinks European tech may actually have the edge. We're going to speak to Balderton's Laura McGinnis. That is next. This is Bloomberg. Welcome back. Fears of an AI market frenzy being revived after OpenAI and NVIDIA announced they were joining forces to pave the way for a more costly phase of development. Analysts are raising concerns of circular financing after NVIDIA said it would invest as much as $100 billion in OpenAI, of course the maker of ChatGPT, to support a massive build-out of data centres equipped with NVIDIA's chips. We've had other news about data centre build-out as well. More recently, here in the UK, commitments as well when Jensen Huang was here, meeting with the Prime Minister alongside, of course, President Trump. Laura McGinnis, principal of Balderton Capital, is here. Balderton Capital, which has backed names including the likes of Revolut, Circle, Graphcore, the exploration company in space, Wave and Zopa as well within fintech. Wave, of course, with autonomous vehicles. Laura, thank you for joining us bright and early. Does it make sense to you, the data centre and infrastructure spend that we're seeing?
Absolutely. I think so. To date, we've heard a lot about the aspirations of European AI. Now we're actually hearing about action. So I think with Jensen Huang here last week, President and CEO of NVIDIA, he committed £2 billion to AI companies in the UK specifically, including Wave and Revolut, two of our portfolio companies.
Yeah.
And I think the main question I have is just timeline. So it does actually seem quite feasible. I think we need to increase compute tenfold, as he said. We need to overcome the AI sovereignty discussion and bring models and compute into Europe. However, I don't know how long it takes, but I am super hopeful.
Jack Selby telling Bloomberg, I think last week, who manages Peter Thiel's money, that he sees a potential bubble and the hundreds of billions could potentially go up in flames. Are there parts of the AI ecosystem that are looking a little frothy to you, or is it still rational?
I think it's still rational, and that we're early days. So maybe the bubble, will burst in a few years, but I don't see it in the near term.
Okay, talk to us about where you see value then accruing in Europe, because you're very much of the view that actually Europe is not on the back foot, that Europe is the place to put your money right now.
Yes, I do. I think. And Jensen wouldn't have come here if that wasn't the case and called the UK an AI superpower. I think I'm most excited right now about the adoption that we're seeing in Europe, and I think that stems from the rich history of some of the regulation and policy that embeds trust into these products. Specifically in consumer AI, we're seeing, I believe it's over 700 million weekly active users of ChatGPT. And however, only 3% are paying. So on one hand, we're seeing really exciting adoption, but on the other hand, the magic that makes people want to pay for a product is not quite there yet. But overall, very excited.
What are the ingredients that Europe has right now to excel in this space? And we've seen some improvements in terms of even in the capital markets. Okay, Klarna's listed in the US, but it has been a listing. Klarna managed to get there. But there's also talent as well and scar tissue.
Exactly. So I was going to say that I think the talent piece is key here, and also the U.S. is helping with. You've seen some of the H-1B disasters of late, which may mean that we have some incredible people coming to Europe and the UK to start to build. So on top of this incredible talent, we'll also hopefully get even more. Additionally, we're seeing mega rounds. So in the past, we talked about a lack of funding. Now, Mistral just announced a $1.8 billion or billion euro round. And so that's great to add to the AI sovereignty discussion that's been had around building our own models, owning our own compute. So yeah, I think so far, recently, the news has been skewing in our favor.
On the talent piece, have you already seen talent moving from the US to Europe? Has that dynamic changed? And do you expect it to accelerate then on the back of these visa changes?
Absolutely. I'm one of the talented people that has moved from the US.
Indeed. We're very fortunate to have you.
Thank you. From the US to the UK. But additionally, we're seeing, in terms of investments, in the past we would see CEOs want to move to the U.S. right away to kick off sales. Now we're seeing a bit of a shift, and people want to stay here and build out their teams. No one is moving their engineering teams to the U.S., that's for sure, because it's far cheaper to build your team here, and there's also great talent. And additionally, I would say there are other ways now to scale, and we're seeing it with companies like, Granola, 11 Labs, and N8N. Just big rounds with big teams staying local. So I actually think, we're moving in the right direction.
This could be, it sounds like this is possibly a bit of a watershed moment for Europe.
I hope so. Okay. I think so.
Laura, fantastic. Thank you very much indeed. Always with a finger on pulse, of course, is what's happening across the European tech ecosystem. Balderton Capital, who, of course, have backed names including Revolut, Wave and Zopa, amongst many others. Staying with Revolut, the company says it is planning to invest some $13 billion in its bid to amass 100 million users, 100 million, with plans to extend into 30 new geographies by the end of the decade. The announcement was made as the fintech opened its new global headquarters in London's Canary Wharf yesterday. The plans include investing $4 billion in its businesses in the UK, creating about 1,000 jobs. And late-night host Jimmy Kimmel took a conciliatory tone in his return to TV Tuesday night. He said it was never his intention to make light of the death of a young man. His show, Jimmy Kimmel Live, was reinstated by ABC parent Disney after reaching an agreement on what he would say on air. The show was pulled on September the 17th following Kimmel's remarks related to the assassination of Republican activist Charlie Kirk.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is you understand that it was never my intention to make light of the murder of a young man. I don't...
Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We're showing you a chart of the 2-year US yield over 5 days. Not much change, 355. But there is clearly confusion in terms of where these FOMC officials, Fed officials, stand on the question as to whether to prioritise the labour market and weakness that we're seeing there or the risks around inflation. Jay Powell firmly in the middle, of course, and reiterating that yesterday with the risks and challenges ahead for the Fed and the complexity of trying to make that call. But you do have people coming down on either side. Michal, for example, saying the labour market is front and centre for her. Myron, of course, Stephen Myron, saying he wants to see multiple 50 basis point cuts. But on the flip side to that, Raphael Bostic saying, hang on, we do need to be careful about inflation. So that lack of clarity from those FOMC officials making it a little bit more difficult. You've seen some evidence in the options markets, particularly around the secured overnight financing rate, that maybe traders are starting to ease back on some of their bets around additional Fed easing. There will be more easing. That is the expectation from those traders, but maybe a little bit less than had been expected a week or so ago. Let's flip the board and have a look at gilts. We had a note coming out, or at least a conversation with PIMCO in terms of their views on the UK with the Financial Times, saying that actually the inflation dynamics here in the UK are not that unusual and that maybe you can start to price in more cuts from the BOE. Those have been faded by the markets. Most do not expect additional cuts by the end of this year from the Bank of England. Speaking, of course, to the stickiness, particularly around services, inflation and wages, PIMCO saying the inflation dynamics are actually not that out of whack with the rest of the world. Watch gilts then, possibly, in the session today. Let's flip the board and have a look at Alibaba. Again, upside coming through for this stock on commitments to spend more than $50 billion on AI. We also have Cathie Wood adding Alibaba earlier this week to one of their funds, two of their funds, in fact. Alibaba commitments around AI investments, that led to a pop in the shares today. The CEO saying he expects $4 trillion to be spent on AI infrastructure over the next 5 years. But clearly, Alibaba is playing a central role in the build-out of AI in China. Now, the EU's Foreign Affairs representative will be speaking on Bloomberg Tech, 4 p.m. London time. Our coverage of the United Nations General Assembly continues. Stay with us. This is Bloomberg.